Greetings traders, David here of Trading Fibs and MarketFi to bring you today's spotlight trend trades of the day. Any all charts presented here today are for educational purposes only. While I may or may not have positions in these charts presented here, is the application of the T3 trending strategy to these charts that may offer future opportunity based on strong or weak fundamentals. So let's get right into today's trend trade setups. As we can see, the IBD market wrap up, one of my favorite ways to end up the day by looking at some of the recent videos, whether it's their market wrap. Here we see three top IBD 50 stocks hitting all new highs, and some of their focus stocks that they call the New America, Mobileye, Trex, and Basco. So let's go ahead and jump right into some of those stocks and see where things are at and applying the T3 trending strategy to see if there is a future opportunity here. Looking at CVS in today's market wrap-up with a price breakout buy point of 105.56 is most recent high around here. Price action on a 50-tick range chart. Again, if I had a 100-tick range chart, my price bars would be a little bit more consolidated. But at this point, what I'm doing is I'm looking for an opportunity for what I would call a pullback. If you are waiting for opportunity on the breakouts, you could have been in this trade a little bit and a lot sooner. So the trade T3 trending strategy is to look for number one, a T3 moving average crossover. That would be shown here by the white dashed line. And so bar number one would be located. Go ahead and draw a trend line here. That would have been this first bar right here, solid Heikin Ashi bar, trend bar, which would have put you in at a price level. Let's go ahead and on the close of that bar would have put you in at 99.48. Now, to decrease risk and increase probability without a pullback, I would want to wait for price action to at least have what I call a T3 moving average cross, and that would be a T3.5 and a T3.10. Those are the exponential moving periods that I have these set to, and so your entry would have been on this bar right over here. Is price action, let's see, it was 1 day later as price action was continuing upside. Now, let's go ahead and put a trend line there for CVS as price action on the T3 moving average cross. And as we continue to move to the right, what we're waiting for in the final confirmation would be a T3 moving average cross plus a 534 moving average crossover. As you can see here, in the background, the green color indicates a 5 crossing the 34 to keep us in trend. And so the early entry with a buy point up above, again, doing your homework, looking at your fundamentals, entry on a technical entry, your entry would have been up here on this bar if you were waiting for final confirmation for all three to be in play. Your initial stop would always be at the most recent swing size low. Price action did pull back a little bit. Now, one thing you could do is price action moves away from the initial crossover, sometimes waiting for the pullback is the better opportunity. And so your initial entry would have been on this bar right here at a buy point of 196. As price action continues upside, here would be pullback number 2 with a buy point up there at 102.60 as price continues upside. Now, again, splicing it into this trade on a 50-tick range chart, you might want to go ahead to a 25-tick range chart or even an intraday 10-tick range chart. But looking at the buy point up here at 105.56 gives you an opportunity to have gotten into this trade a little bit earlier. Now, given market conditions now, as we are settling at some higher highs within the overall market index, you want to keep heed of that and any other technical indicators that you might use. However, the simplicity of this is the fact that CVS right now with an IBD buy point of 105.56 gave you an earlier entry here back in the beginning of May, and over the last couple of days, price action is continuing to move upside on a 50-tick range chart, giving you a splice in before that buy point. Let's move over here to CRM, Salesforce.com. Salesforce.com, a April 29th buy point for IBD of 71.10 as price action moved to the upside. Earnings had been back in February, and then earnings just came out recently. So here we have again, similar setup. Heikin Ashi bars and crossover and 534 EMA all at the same point. That is what we call the gold standard setup. Now, whether that price action happened all in one bar or not, waiting for the pullback, re-entry. At this point, since you are watching the chart or looking at it at this time, the question is the trend going to continue upside? So what I look at is this is on a 100-tick range chart. For longer term, with earnings just coming out, price action has crossed over. Okay, but we're a little bit beyond the buy point as price action set itself up right here on the T3 moving average crossover, or T3 in trend, and then you had a solid Heikin Ashi bar 534 crossover. So the better of the opportunities might be to go down to a 50-tick range chart. So splicing in on a smaller time frame as you've gotten all this chop, earnings coming out, and so there was your entry. Now what you do is you have a pullback, again, 71.10, buy point above the previous high, back set in April based on the IBD strategy. If price is to continue upside based on fundamentals, you'd want to see a turnaround here. 534 crossover is in play, the green background to show trend is to the upside, and you want to make sure that your bars turn around exactly like you see right here. Solid Heikin Ashi bars with the tails shadows up. Let's go ahead and zoom in on that a little bit here. Looking for this identical setup on a smaller time frame, and you'd want to make sure that your T3.5 was in the green. You now have T3.10 and the 5 is above the 34. So all things said, price action is in a bullish bias. All right, let's take a look at some of the three stocks that IBD 50 an all-time high. Let's start with Valiant Pharmaceuticals. As we can see here, price action on a 200-tick range chart above a buy point of 150.08 is back all the way back here in around December 22nd on the breakout. Again, if you had been following this stock, you would have had an opportunity to splice in a couple days earlier as then price action broke out, and over since the course of the last 5, almost 6 months, price action continues to the upside. So being on a 200-tick range chart, again, you've started a new trend to the upside, all-time high. The question is, how do you get into a stock like this? Well, again, you got to splice it down. You got to come to a smaller time frame on an intraday or close to it. So here we go. We go down from a 200-tick to a 50-tick range chart. Here's price action in the last at least 7 days. Again, a lot of chop here, but again, take a step back, look at the big picture. Here you have a splice in right here on price action on the 14th to the upside. Several pullbacks during market action and finishing up the session today on a pullback. So again, use the smaller time frame to get into a strong fundamental and all-time high stock. Here we're taking a look at Regeneron Pharmaceuticals. Again, please do your diligent homework. Check out IBD. Check out whatever resources you have. Look to see where the fundamentals and value are with a 486.10 buy point, whether you're trading the stock or on the options here if they're available. You'd want to make sure that your charts are in trend. And again, on a 200-tick range chart, we absolutely been in trend for the last at least 7 days here, starting back in 512 with price action breaking to the upside. 5 has been above 34 as moving averages continue to the upside. Again, you want to, if you want to splice into a trend like this, you got to get down to a smaller time frame. So let's go ahead to a 6-month and a 50-tick range chart. So here you go, price action, obviously a lot more choppy, but again, looking for price action as it moves up on the crossovers and the pullbacks. Crossovers and the pullbacks, you want to make sure that you enter as close as possible to the new trend, which is the HA bar crossing over the T3 in trend to the upside. You're looking for green, green, and green all across. All right, third and final pharmaceutical. Here we see NetEase. NetEase, actually not a pharmaceutical, excuse me. We had Regeneron Pharmaceuticals, and then there was NetEase, and NetEase Incorporated, showing a nice increase here at an all-time high with a 120-ish or 120-ish buy point here marked at 122.93 or so. Here we can see on a bigger time frame price action breakout from here Early entry would have been back here as the color cloud 534 crossover with a slight pullback. So if you were waiting, this is a great example. If you're waiting for price action to break above an IBD buy point, you'd want to wait for the pullback. The first pullback was right here on April 28th. Price action pulls up, pullback, and then re-entry. Earnings came out, and it's been all up since then. Again, if you're looking to splice into this, I would wait for a pullback at this point. 100 tick, you might want to come down to a 50 tick range chart, and on an intraday be able to get into this trade based on stronger fundamentals. Here we have their final last three stocks in the New America, a section in their newspaper, which they identify new companies in America or companies that have been around, talking about fundamentals. This here Mobileye company they talk about here with a 60.38 buy point. Again, some of the stocks we've been looking at today have already surpassed their buy point. Now we have a stock that is underneath the buy point all the way up, so forming what they call a cup and base at this point. Again, I look at this. If my fundamentals are strong, it's based on the IBD fundamental scores that they give. Unfortunately, with this company, it's only 78. Obviously, a score of 99 is much better. However, looking at the entry point based on technical setups, I do have an initial setup back here in March with a T3 moving average crossover. Then I have the T3 moving averages cross one another. That would be identified by the T35 and the T310. And then all in the green is the 5 above the 34, which is the background here, which keeps you in the trend. Again, if you're looking for a pullback entry, wait for the breakout here back on April, which continue to put you inside. Another pullback entry, which now puts you upside again. Another slight minor pullback. So right here, you're waiting for, that's right, the T3 with 5 exponential moving averages to put you back into the trade. Now, if a 100 tick range chart is too large, you can splice in on a smaller time frame. Here we see Trex. Trex, I believe they're the makers of decks and those wonderful things that people can stand on while they're out at their pools. Obviously, over the course of time, Trex has had a good record to the upside here. On a 100 tick range chart, you can see price action around 58, 58-ish, about, what do you say about here, maybe 57, 69 or give us so, a couple ticks. Price action, that's the buy point. So right now, Trex holding down with good, strong fundamentals through the company. So here we see price action now turning upside. We have a T35 to the long. 5 is above the 34, indicating that we're about to have a crossover. And we have the T310, which should eventually turn upside. So again, I'd want to get into a smaller time frame. And so I'd go to perhaps a 6-month and come down to the 50 tick range chart, and here we go. We have an opportunity as price action now has punched upside, looking for the pullback. Again, here we have green, green, green with a buy point all the way up above. Again, we had a nice run up here, only to pull back. So you maybe perhaps do want to wait until the breakout, or at least a break above here, 55.99. But the smaller time frames is going to give you the opportunity to splice in, and then you come out. All right, you come out to let's go to a year here, and let's go to 100 ticks, and that would give you the opportunity to stay in the trend a little bit longer than the choppiness and the noise that you get on a smaller time frame. All right, again, Trex below the buy point. And finally, the last stock in their IBD New America focus today for May 21st was Vasco Data Securities. You can hear more about that through their market wrap there. Again, with a 99 composite score, which is pretty strong fundamentals. Here we see price action has been a little bit choppy. Their buy point up here at 31.94. As you can see now, you've had a crossover in the green, all green 3 bars, T3 up, T310, and 5 above 34, indicating a strong trend in play. Again, you might want to wait until you break out technically above the most recent high there, 28.22, as price pushes up to 31.94, or wait for the breakout above, wait for a pullback, and see if price action continues in trend. Make sure your cloud is green in the background, indicating a 5 above 34, and your Heikin Ashi bars keep you in trend. What additional chart that I can use to indicate to make sure that I'm in what I call a bullish versus bearish pattern is simply applying a 50 and a 144 EMA chart and see where price is. And if price action is breaking through the 50 and remaining above the 144, makes my entry on the chart a lot more comfortable knowing that I am in trend. That concludes today's Spotlight Trend Trades of the Day, focusing on the IBD market wrap-ups. Again, you can check them out here at ibdtv.investors. And my trading mantra is one simple strategy: any market, any chart, any time frame that will keep you disciplined. And that's a wrap, guys. So have yourself a Blue Zone day.